everyone. Welcome to the eighth episode of ETF Ke Funde. Till now, we have talked about what is passive investing, what is ETF, what are the advantages of ETF, and how to buy and sell ETF. We hope that you have viewed these earlier videos and you now know more about exchange traded funds. In this episode, I'll be talking about the types of ETF. So ETF can be based on any index which is replicable. An index needs to be based on a rule-based method. So any theme, any strategy, any market segment, any market can be tracked if a rule-based portfolio creation can be defined and this portfolio is replicable from a fund management point of view. And that is why there are so many ETFs on different type of asset classes, on different strategies, different theme, different segment, which exist world over right now. In fact, you'll be surprised to know that there are more than 7,600 ETFs globally. The total AUM of these ETF in total stands at more than $8 trillion, which is more than 2.5 times the size of India's GDP. So let me first talk about what sort of ETF can exist across asset classes. And several of them are already existing, maybe not in India, but in globally. And maybe in future, we can see all these ETFs available to investors in India also. So one very straightforward ETF products, as you can see in the slide, is based on equity markets. And the intent is to capture the performance of either a broad equity market or a segment of equity market or a sector within an equity market or a theme within an equity market, which we'll talk about in the next slide. ETFs can also be based on a single currency or it can be based on a basket of currencies. For example, you can have an ETF which tracks the performance of Indian rupee versus US dollars. Or you can have an ETF which tracks the performance of US dollars against basket of currencies like Euro, Chinese renminbi, INR, yen, etc. ETFs can also be there on commodities, and in India we are very well aware of the kind of demand which is there for gold ETFs. But it's not just gold ETF in the commodity space, it can be based on crude oil, it can be based on silver. So while in India till now we haven't seen ETFs on these commodities, but globally they exist. And in India, we hope that soon we can see products on such sort of commodities also. It will allow investor not only to take speculative positions or long-term positions on various commodity prices, but it will also allow investors to hedge their exposure by investing in these commodity ETFs. And lastly, there are several fixed income based ETFs in the market, and these fixed income ETFs can be based on different instruments. It can be based on government securities, it can be based on bonds, it can be based on money market instruments. So each fixed income ETF can have different type of risk profile, as is the case with any other ETF, right? As I mentioned, that for an ETF, you need to have an underlying index, and the index should have a well-known public methodology which will result in a very transparent portfolio. And that is one of the key advantages of ETF, that at all times you know what is the objective of the fund, what is the portfolio of this fund, and what sort of targeted exposure I'm getting through this portfolio. Now, in this slide, across investment style, there can be several type of ETFs, right? While we call ETF as a passive investment vehicle, a lot of thinking goes behind creation of the ETFs. And that is what you will realize when you will think about the kind of possibilities which are there in ETF world. So one of the very plain vanilla basic ETFs are which are based on broad markets. Let's say Nifty 50, Nifty Next 50, Nifty Mid Cap 150, S&P 500, which just tracks large cap segment of an equity market or a mid cap segment of an equity market or an entire equity market like Nifty 500 based ETF. Then a next level of complexity is a sector-based ETF, which tracks different sectors. And bank ETF, for example, are very popular in India right now. And in fact, IT-based ETF are also getting very popular right now in India. Next is the theme-based ETF. And in India, while the thematic investments has not caught up the investor imagination as much, because in terms of investment there are so many few themes which are available to Indian investors, but globally it has been one of the fastest growing space. If I'm talking about popular theme, one of the most popular theme is ESG investment, where you invest in companies who are doing well on environmental, social, and corporate governance parameters. Other themes are, let's say, an ETF based on disruptive technology like electric vehicles, artificial intelligence and robotics, social media, e-commerce, etc. See what these thematic ETFs are doing. They are offering investors the avenue to take exposure in companies which are working in different spaces within an economy, and these themes can be the one for the future, and that is why the investor believes that by investing in these themes he can grow his corpus significantly, right? For example, if someone is investing in electric vehicles based ETF, he or she believes that electric vehicles will do phenomenally well in coming years, and electric vehicles will create its own segment of the market within the automobile space, and that is why investing in these products makes sense right now. And that is what thematic investing gives to investor. It gives an option to take such exotic exposure in ideas and themes which investor expects to do well. The next one, and one of the again very popular ones, are strategy based ETF or smart beta ETF. So typically what happens is, in a sector based ETF or a plain vanilla broader market based and cap based ETF, you pick companies based on market cap and based on certain filters. In smart beta based ETF, you first of all shortlist and select companies based on factors. And these factors are the well known factors who we believe tends to have a superior performance across the year. For example, there can be a call it low volatility based factor, which talks about that companies which are less volatile in nature, which have lower standard deviation, whose price have risen more smoothly, tends to outperform the market on a return to risk basis in the long run. And hence, low volatility can be used for stock selection and portfolio creation. And these smart beta indices uses such factors to first select the companies, create the portfolio, and ultimately weigh these stocks based on the factors and or some combination of factors and market cap. What do I mean by that? In large cap based ETF, the large cap companies will be selected and the weights will be based on market cap. Reliance and HDFCs will always have the larger weight based on the current scenario. But if you're building a smart beta ETF, your weighing will be, let's say, only factor based, or it can be based on multiple of factor and market cap. So there will be some portion of factor which will be there, which will tilt the weight of securities which are doing better on these factor in the portfolio. So for example, if HUL has lowest volatility in low vol factor based ETF, then the actual weight will be higher compared to a company which has relatively higher volatility. And these smart beta indices can be based on multiple of factors. If you're talking about right now, it can be based on momentum, i.e. selecting the companies which are doing well based on price momentum recently. It can be based on low volatility, as I mentioned. It can be based on quality factors, and it differs from AMCs to AMCs and scholars to scholars on how people are defining quality. It can be based on factors like value, growth, etc. And lastly, ETF can be used to provide a very country specific or a region specific exposure. For example, a US market based ETF in India will provide a very low cost, transparent exposure to the US market to Indian investors. Similarly, an emerging market based ETF will provide exposure to all the countries which are emerging economies to the investor. And that is why these products also have grown very popular, and a lot of institutional investors and a lot of even retail investors now globally use such other countries and other region ETF to take exposure in other economies. Now, moving on, lastly, I'll just talk about what sort of ETF spread right now we have in India. So in India right now, there are more than 100 exchange traded products which are listed. In total, they have an AUM of 2.89 lakh crores. I'll repeat again, 2.89 lakh crores. And that is how big the ETF market in India is. In fact, out of this 2.89 lakh crore, the Nifty 50 ETFs alone capture 43% of the market. The total AUM of all Nifty 50 ETFs put together is 1.25 lakh crores. After Nifty 50, the most popular ETFs are Sensex ETFs, PSU bond ETFs, which provide you exposure to these CPSCs and CPSCs plus SDLs and corporate bonds, etc. Then Bank ETF, which provides exposure to a very concentrated portfolio of bank stocks which are listed in Indian equity market, then CPSC ETF, and then finally a non-equity and non-fixed income ETF, which is a commodity-based ETF, a gold ETF, which is very popular among retail investors, which right now captures around 4.9% of the market, and current AUM is around 14,000 crores. Apart from that, you can see in the slide that there are a lot of thematic based ETF also. There are even smart beta based ETF also in the market. But right now, they are not that popular. The AUM is not that high because, as I said, the Indian ETF market has just begun its journey. Investors are still understanding the benefits of ETF, how to invest in ETF. And by that logic, the first point of investment is always, and understanding is always, broad market based ETF, and we are seeing the popularities there, and we hope that in coming future the smart beta based products, the thematic products, the other exotic products will become more popular when investors starts to understand the nuances and starts to invest in these products based on his or her risk profile. So stay tuned for the next episode of ETF Ke Funde, where I'll be talking about the factors which are important in ETFs or parameters which are important for doing ETF investments. I hope in this episode you got a basic idea of what type of ETF exists globally. So do stay tuned and watch out for our next video. Till then, thank you and goodbye.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.